Hey, Dan Passarelli here. Well, the market, geez, it just blew the doors off it today. The S&P 500 was up 1.5%. Every major sector in the market was up quite a bit. Utilities was only up about 0.4%. Everything else was up close to 1% or more, or a lot more. And the most important thing is that the 50-day moving average for the S&P 500 was permeated today. Now, the 50-day moving average, you talked a little bit about this yesterday, is one of those key moving averages where when the stocks are below it, it's resistance, and when stocks are above it, it's support, and once it's crossed, it becomes the other. And so today what happened is the SPY was below the 50-day moving average, so it was resistance, and today it crossed above it. So what's likely to happen is we can get some follow through to the upside. Now, the 20-day moving average is sitting pretty close to where we closed. The 20-day moving average very commonly sees follow through. And so if on Monday we break through that, it's pretty likely that we're going to see follow through to the upside. Now, as I mentioned in yesterday's video, we do have CPI and PPI coming out next week, and that's going to be some real fundamental information that's going to override anything we could be looking at technically. And the week after that, which is about 10 days or so away from today, 11 days, we have the September Fed meeting. Now, we had a few Fed governors speaking today, and they said some things that were positives for the economy and some things that were, well, let me rephrase that. Well, no, they did say some things that were positive for the economy, some that were negative, some that were leading us to believe that they would be raising interest rates another 75 basis points at that next meeting, and I think that that's pretty widely believed at this point. So I would say that from a technical standpoint, in all likelihood, I wouldn't be surprised if we see a couple more good up days, but then when we have the inflation information out next week, market could go up or down, but it's really all about that next Fed meeting. And as we continue raising interest rates, we could be looking at a buy the rumor, sell the news sort of scenario if a lot of the market is expecting a 75 basis point hike and the market continues higher. I think if we get that 75 basis point hike, we would be pulling back pretty well. Now, just one more thing. What I'm looking towards doing myself is if the market does end up heading a bit higher, is looking for some opportunities to buy some puts as a hedge against longer term investments. Now, if you look at the VIX, it's still 22.85 here after Friday's close, which is still a fairly high level, and it's likely to be staying high until after PPI and CPI, and especially until and after the Fed announcement next week. But if I can buy puts in a higher market with a lower implied volatility, I think that that's a good deal. Anyway, this is Dan Passarelli. Have a great weekend. Trade smart.